Hello friends. If you are 65 or older, there is a brand new tax break sitting on the table right now that was written specifically for you. And a lot of seniors are going to miss it entirely. Not because they do not qualify, but because nobody told them it exists or that it comes with an expiration date. It is a new federal deduction worth up to $6,000 per person. And for a married couple where both of you are 65 or older, that can be up to $12,000. But here is the part that makes this urgent, and the part I want burned into your memory by the end of this video. This deduction is temporary. It is here for the 2025 tax year and runs only through 2028. After that, unless Congress steps in to extend it, it disappears. So you have a limited window to make sure you actually use it, and today I am going to explain exactly what it is, who qualifies, how much it can really save you, and the honest truth about what it does and does not do, because there is a lot of confusion out there that could cost you. Let me start with what it actually is. This came out of the tax law passed in 2025, and it created a new deduction just for Americans age 65 and older. The amount is up to $6,000 for each qualifying person. Now here is the good news layered on top of that. This deduction does not replace anything you already get. It stacks on top of your regular standard deduction, and on top of the extra standard deduction seniors have always received. And it does not matter whether you itemize your taxes or take the standard deduction. You can claim this either way. To qualify, you need to be 65 by the end of the tax year and have a valid Social Security number. So as an example, a married couple where both spouses are 65 could be adding this $12,000 deduction on top of a standard deduction and senior add-on that already total tens of thousands of dollars, which can pull a meaningful slice of their income out of the taxable column entirely. So for millions of older Americans, this is simply a new layer of savings added to what they were already entitled to. Now before I go further, if you are not subscribed to this channel, take 1 second and do it now and turn on the bell. I do not cover these things to chase headlines. I cover them because tax breaks with deadlines are exactly the kind of thing that slips past good, hardworking people who are busy living their lives, and a few minutes of knowing about it can mean real money kept. So hit subscribe and stay with me, because this next part is where I have to be completely honest with you. Here is the truth that the flashier versions of this story leave out. This is a deduction, not a check. Nobody is mailing you $6,000. What a deduction does is lower the amount of your income that gets taxed. So the actual money you save depends on your tax bracket. For most middle-income seniors, this deduction translates into somewhere in the range of a few $100s in real tax savings, not thousands. To put a number on it, a single senior in a typical bracket might see somewhere around $200 to $700 in actual tax savings from this, depending on their income and rate. That is still money worth having, money that stays in your account instead of going to the government. But I never want you walking away thinking a $6,000 windfall is coming, because it is not. Understanding that difference is what separates someone who plans well from someone who feels let down later. And there is a second piece of honesty here, because who benefits from this is not everyone equally. If your income is very low, low enough that you already owe little or no federal income tax, this deduction may do nothing for you, simply because there is no tax left to reduce. And on the other end, this break begins to shrink once your income climbs past $75,000 as a single filer, or $150,000 for a couple filing jointly, and it phases out completely above $175,000 for singles and $250,000 for couples. So this was really built for the broad middle, the everyday retiree, which is most of the people watching this. There is one more myth I have to clear up because you have probably heard it. Some have described this as the end of taxes on Social Security. That is not quite right. This deduction can reduce, and for many people even erase, the federal tax they owe on their Social Security benefits, which is a genuine help. But it did not change the underlying rules on how Social Security is taxed, and higher-income retirees may still owe tax on their benefits. So if someone told you your Social Security is now completely tax-free no matter what, gently correct them, because believing that could lead to a nasty surprise at filing time. So what should you actually do with this? Let me give you the steps that matter. First, make absolutely sure this deduction gets claimed on your return. If you use tax software, it should walk you through it, but check that it did. If you use a preparer, ask them directly, did you apply the new senior deduction to my return? And if you file your own paper return, this is claimed on its own line, so do not skip it. The single biggest way to lose this is to simply never claim it. Second, keep an eye on that income line if you are anywhere near the phase-out. Because the deduction shrinks as your income rises past those thresholds, the timing of things like a retirement account withdrawal or selling an asset can affect how much of this break you keep. If you are close to the line, it may be worth a conversation with a tax professional before you take a big withdrawal in any of these years. Third, treat the calendar as the opportunity it is. This is available for 2025, 2026, 2027, and 2028. That is 4 tax years where this is on the table, and then, as the law stands today, it is gone. So this is not a one-time thing to scramble for. It is a window to plan around for the next few years while it lasts. So here is everything in one place. There is a new federal deduction of up to $6,000 per person for seniors 65 and older, up to $12,000 for a qualifying couple, and it stacks on top of your existing deductions whether you itemize or not. But it is a deduction, not a check. So for most people it means a few $100s in real savings. It does almost nothing for the lowest income seniors, and it phases out for higher earners. It can reduce or erase the tax on your Social Security, but it did not make Social Security universally tax-free. And it is only here through 2028. To make the most of it, confirm it is actually claimed on your return. Watch your income if you are near the phase-out, and plan for it across all 4 years while it exists. Do me a favor and share this with someone 65 or older who files taxes, because this is exactly the kind of break that disappears quietly while good people simply never knew to ask for it. Subscribe, turn on the bell, and I will see you in the next one.